Aloha everybody, this is Ku here with your mortgage market update. So in my last video, I covered a little bit about the three main loans that you can get, which is your FHA loan, your conventional loan, and your VA loan. I wanted to take a little bit deeper dive into each one of these loans to just help my community understand the financing that is available for them in the mortgage market. So with an FHA loan, it's usually going to carry the lowest interest rate, your Federal Housing Administration loan. The minimum credit score for that to government guidelines is 500, but a lot of banks and lenders will put overlays on their qualifications as far as what it takes to qualify for the loan, because not everybody wants like a loan with 500 credit score, because that means that the person is a little higher risk, right? So basically they'll put what's called an overlay, basically guidelines on top of the federal guidelines. So they'll have, some people will say like you need 580 to qualify, like a 580 credit score. Some people will say you need like a 600 credit score. Right now, I would say bar none, you're probably looking at about a 580 for a lot of these lenders to qualify for an FHA loan. So as we continue on to qualifying for FHA loan, you're gonna have to. It does require a little bit lower down payment for you to get in, compared to like a conventional loan, right? The thing with an FHA loan is there's always going to be a mortgage insurance premium, whether you put down 20% or not. 11 years ago, they changed the law to an FHA loan constantly providing mortgage insurance premium. So when you get that 20% equity, like you would in a conventional loan where it'll fall off, you know, with the conventional loan, it doesn't do that with the FHA loan. The FHA loan, you'll hold that mortgage insurance premium forever. So basically, what you have to do is refinance out of that loan into a conventional loan to lower your payment, right? Get out of that mortgage insurance premium. And the reason why people do that is the mortgage insurance premium is just an insurance fee that you're paying to somebody. It doesn't benefit you in any way. You know, you're basically just throwing money away at that point. So you don't really need that. So a lot of people just refinance out of that. So so one of the qualifications definitely is going to be you need at least a 500 credit score, most likely 580 because of overlays with a lot of these banks and lenders, right? A broker like myself, we can get you something down to 500, but it might take a little bit more and you might have to put a little bit more down payment. So FHA does require a 3.5% down, but with a credit score of 500, if you have a low credit score, you're probably gonna have to put closer to 10, right? But if you have like a 620 credit score, you can get away with 3.5% down, which is not bad. Now, this is only the down payment, right? This is the down payment that goes into your loan. So there is still closing costs that are associated with your loan. I say it's anywhere between 3 to 5%, depending on the county that you're in. Also, another caveat to these FHA loans: if you live in the state of Hawaii, there is certain income limits that you can qualify for these loans. So, not income limits, but basically loan limits. There's FHA loan limits. So, if you're trying to buy something in Honolulu, for instance, it's 780,000 basically that you can get a loan for. So, if you're buying a house that's 800,000, right? You kind of get a loan for more than 780. So you would have to put down 20 grand to at least minimum 20 grand to get a loan from FHA, right? Because your loan amount can't go over 780 with in Honolulu, right? But if you're like trying to buy on Kauai or even Hawaii Island, there's like Big Island, it's a little bit higher for their loan limits. Now, I don't set these loan limits. I don't know why. The Federal Housing Administration, I would think in Honolulu it would be a little bit higher, but I don't write the rules, you know what I mean? I just play by the rules. So that's the rules, unfortunately, in the state of Hawaii. Is anything over 780,000 for a single family residence, it's gonna be under 780,000. Now, another thing with these loans is The Federal Housing Administration kind of made it to where lower income people can try to get in. That's why you only need to put down 3.5%. And your debt to income ratios can go slightly above 50%. So if you make a debt, basically what a debt to income ratio is, if you're not familiar with a debt to income ratio, your is basically the amount of debt you have to the amount of income that you make, right? So for example, if you have a guideline that is setting a 50% debt to income ratio, let's just say your mortgage payment is $500 a month, right? All the debt you have, your car payment, anything on your credit, car payment, cell phone bills for some people, electricity, whatever, you know what I mean? Credit cards, anything that is on your credit report, if that adds up to more than 50% of what you make, so for simple math, if you make $1,000 every month and all your bills, credit cards, car, whatever, is more than $500 a month, that is a 50% debt to income ratio. And anything over that, you basically cannot qualify for a mortgage. So you kind of want to, you could, and the reason why I'm telling you guys this information, because I feel like this is the way I can give back to my community so people don't get ripped off. No matter what industry you're in, you're going to have apprentices and you're going to have journeymen, right? I've been doing this for a little bit over 10 years now. And when I first got into this industry, I wouldn't say I didn't know what I was talking about, but I would definitely be very salesy, I would say at first, which a lot of people are in this industry. And because, I mean, we are salespeople, right? But as I got a little more experience in this industry, I kind of realized that sales isn't trying to sell somebody, right? Sales is more about listening and seeing if you could provide a solution to the problem that these people have. And if you can't provide the solution, I mean, then you're not going to get the sale, right? But I would say, like, for salespeople, don't just keep pushing, man. If you can't provide that solution, then just move on to the next. Find somebody that you can provide a solution for, right? And the reason why I want to make these videos for free is just so I can educate my community a little bit more on what they qualify for. So when they come across apprentice, you know what I mean? At least they're a little bit more educated, so they know, like, okay, this is why I'm paying this, you know what I mean? Because if you come across somebody who's not that experienced in this industry, and I'm not gonna lie, like, I've done this many times, right? That sometimes the numbers will change, because when you're inexperienced and you're not working with loans a lot, like how I am now, you're not gonna be everybody's scenario is different, right? And if you're not used to seeing that scenario for the first time, you might be like, you might give them an estimate, but you're not really educated on how impounds work, or like if they're buying something and it's closing on the 1st of the month instead of the 15th of the month, you got to add taxes for those 15 days, right? Or insurance, you got to prorate their insurance for those 15 days. And when you're first starting in this industry, they'll just give you they'll give you what do you call it? Kind of like basically serums. Well, not serums. I would say calculations that are already set in the system that you're sending out. You're sending out these calculations in the system that are just basically, they're just set. So like they're set for everybody to close on the 15th of the month, right? So then they'll send it out to the client just to make everything faster for you. But as you grow and you get a little bit more knowledgeable in this industry and you gain experience and you get more of an expert of your craft, I would say it takes a couple years for sure, because you need to work with a lot of these loans to know what you're doing, right? And you need to experience certain scenarios to make sure you know what you're doing, right? So when that scenario comes across your desk again, you'd be like, oh, this happened to me last time. So you can mitigate everything that's about to happen in the future, right? But when you don't have that experience, you can't mitigate any of these problems. So you just kind of roll with the punches, right? And some people will get mad because and you just got to be honest, honestly, because a lot of these loan officers will be like, oh yeah, I can get you this or I can get you that, and then things change and they don't know why it changed, right? So in the very beginning, you just got to be like, hey, this might change, and this is for all you new loan officers out there. Don't guarantee anything, bro, because anything, you know what I mean, can happen in these loans. Anything can happen in these transactions, you know what I mean? The realtor could get sick, the seller could get sick, the buyer agent could get sick, the title person could get sick, escrow could get sick, something could fall out, and it could because we work with tight timelines, you could go over a timeline, you have to extend the lock, you know what I mean? So you want to be on your A game for sure, and it's always important to, I mean, these apprentices got to eat too, you know what I mean? I get it, but I would say for all you apprentices, definitely don't make any promises. You know what I mean? But like I said, I've been doing this for a long time. A lot of us have, and very fortunate to have learned a lot of the things that are going to come up, so we can get rid of those problems in the beginning of the process and tell you from the very beginning, right? And I just want to make these videos to educate everybody on what they're qualified for, and I feel like this is the way I can give back to my community on what I learned in these past 10 years of me being a mortgage broker. So just get ready, because there's going to be a lot of videos coming out, and some mortgage brokers will get mad at me. Some loan officers are going to get mad at me, because a lot of this information, you're going to be able to do a lot of these loans yourself. If you really want to and you bite down, you can. You know what I mean? Once you get familiar with all these forms I'm going to show you and a lot of this information that you're going to have, and you're going to see that what we do, it is a lot of work. You know what I mean? I mean, you're gonna have the tools and the knowledge that I'm gonna give it to you. You know what I mean? You're gonna be able to do everything yourself, 100%. But are you gonna be willing to be able to put the time in to nurture this deal from beginning to end? And if you are somebody who wants to get into mortgage, I've trained many loan officers from the bottom up, got them licensed from not knowing anything. So just let me know, like, if you want to get into this, I could help you get in. I'm even thinking about making some videos and making a course just to help people get in, because it is a very lucrative business. But I'm not gonna lie, it takes a lot of experience to get good at. You're gonna need somebody to take you under their wing, because it's not one of those things where you can just apply. And like I said, you're gonna have to work with a lot of these loans and they're able to get experienced. You know what I mean? There isn't just a course you can take to teach you all these scenarios. Like, everybody's scenario is different. So I hope you guys, appreciate what I'm doing for you guys. And I'm stoked to share this knowledge with you guys. And if you guys have any questions, shoot me a DM, give me a call, jump on my website. There's a link in my profile. You can check it out if you guys want to apply. And yeah, just hit me up. For all you guys who kind of don't know where you are in life right now and you kind of want to do mortgages, this is a good time to learn, because it's a little slower. So you can learn what you need to, and when it gets busy, you just be bagging, making a lot of money. It's very lucrative. So yeah, hit me up, shoot me a DM. Aloha, guys.